please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, we have a lot of cues to work with in today's trading session. Besides earnings reactions, we have earnings which will be coming out today as well. To put everything into perspective, as well as what we can probably expect in the frontline indices, which were resilient as compared to the mid-cap index, which underperformed, we have Mangalam Malu joining in to give us more. Mangalam, well, over to you.
Good morning, Ekta. So, this week has been interesting for our markets because if you take a look at the Nifty, Sensex, both of them have gained 1%, added or aided by the Nifty Bank, which has gained about 2%. That compares with the mid-cap index, which has eroded nearly 1.5% of its market cap, the index that is, in this week itself. However, that's about this week. Just rewind the clock a little more. Last 6 days, if you take a look at it, on 3rd May, and the 4th May, the Nifty lost about 100 points cumulatively. And on the 7th May, which was this Monday, the Nifty gained 100 points. On 8th and 9th, we saw a gain of close to 26 points cumulatively on the Nifty, and yesterday we lost 25 points. So in essence, from May 2nd to May 10th, the Nifty hasn't moved at all. 10,718 is what it was on May 2nd, and 10,716 is what it closed at yesterday. But while the Nifty did not move, the India VIX, the volatility index, actually moved by more than 12%. So 12.8 is where it was on May 2nd, and May 10th, as of yesterday's close, it has crossed 14.4. So that is something we'll watch out for. Why is the VIX rising while the market is absolutely consolidating? That is because Karnataka, all through this week, we've been hearing a lot of political opinion, political experts, all the pollsters, they say it is going to be a very close contest, and this will, in Ravi Shastri's words, go down to the wire. So we'll keep an eye out on that. Another thing I'm watching out for is the FII selling in cash markets. Surreptitiously, they've been pulling out money. Actually, not so surreptitiously now, because it's been 19 straight trading sessions where they've pulled out money, and in April they pulled out around 9,600 crores, and in May so far they've pulled out 4,100 crores. Domestic institutional flows have been strong. Let's see whether that trend continues or not. That is something we'll be watching out for, given the macros. Crude above 77. If you take a look at rupee, that has weakened, and the India 10-year bond yield has also been around that 7.7% mark. Watch out for the 10,700 mark, because that is where we've been seeing put addition for the last couple of trading sessions. So we'll watch out for that. As of today, the global markets are positive. The SGX Nifty indicates a strong start. Let's see how we go, given that tomorrow is the big domestic event.
All right, Mangalam, we can just imagine Ravi Shastri saying that, right? I mean, Siddha's bowling and yet he's hitting it out of the park. And, anyways, we'll wait by next week to see who comes out on top out there. But for today, what are the stocks we're going to be focusing on?
Just to add to that Ravi Shastri part, I remember after every match he would say at the end of the day it's cricket which is the winner. So let's hope at the end of the day democracy
and yet it was a cracker. It was a
cracker, tracer bullet. So we'll keep an eye out on that. We'll take that off air. But as of now, a lot of stocks to work with, most of them from the consumption sector. So Asian Paints came out of their numbers yesterday. Double-digit volume growth is something that the street will like, given we were expecting anywhere between mid to high single-digit volume growth. Titan, one would say the revenues are a bit of a miss at 11% versus 15% expectations, but the strong margin expansion actually more than made up for that, and the company delivered a beat on the bottom line. Z, the ad revenue growth at 24% was pretty much in line with what the street was expecting. That stock should also be in focus today. Nestle, gross margins expanded out there. The EBITDA margin expansion led to a bottom line beat. Emphasis, 4th consecutive quarter of strong earnings performance, and add to that, the management has revised their margin guidance higher by about 100 basis points. So that is something we'll watch out for. Apollo Tyres, the India business operational performance has really zoomed. The India EBIT has gone higher by 48%, which has led to a 21% increase in the revenue, as well as strong performance in the India business has led to stabilization in the EBIT margins. However, let's talk about the bad results now. We have Union Bank of India slippages. They've risen 140% because of the RBI circular, and the company's posted the biggest quarterly net loss ever at close to around that 2,600 crore mark. Adani Enterprises, weak results, revenues as well as net profit declining anywhere between 14 to 17%. Ujjivan, however, strong set of numbers. The net interest income grew by 76%, led by disbursements, which grew by 60%. Moving away from results, Fortis, that one kept us up till late last night, because the board has now finally accepted or recommended the company to go ahead and accept the offer made by Munjals as well as Bermans. PC Jeweler, they finally announced the details of the buyback. So 424 crore crore buyback at a price of 350 rupees. That means an acceptance ratio of 12% given the promoters will not participate in this buyback. Watch out for all the telecom stocks. Jio has gone ahead and offered postpaid unlimited calling at 199, so the others might feel a bit of a pinch. Shankara Bilpro, looks like people are buying more tiles than pizzas because their retail SSSG has been 27%. And finally, ChemFab Alkalis, superb numbers, revenue up by 70%. The EBITDA, that one grew by nearly 192%.
Okay. All right, Mangalam, thanks very much for that. So a long list of stocks to watch out for, especially from the consumption space. Time for a break now.
Well, post-market yesterday, we got a whole host of numbers. So let's kickstart that then with a couple of reviews. Asian Paints reported a good set of numbers, double-digit volume growth in the decorative paint segment. That made it, look quite good. Mangalam's here to highlight those numbers. Mangalam.
Absolutely, Nigel. A tinge of green, rather a shade of green on Asian Paints in today's trading session, primarily because the India decorative business volumes, we saw double-digit volume growth as against the expectations of 7 to 8%. So that was the key positive. If you take a look at the revenues, the company posted revenues of close to 4,484 crores. That compares with our poll of close to around 4,400 crores. So there was a beat out there as well. The EBITDA at 840 crores, pretty much in line with what we're working with, 830 crores. However, remember the street was expecting a bit of a downside risk given the sharp surge that we've seen in raw material costs. But however, it reaffirmed the old adage that during inflationary environment, Asian Paints is the one that really does well. The net profit, that one was a little below expectations. That was primarily because of two factors. One, the other income came in lower by around 40 crores. And secondly, the effective tax rate, that one was about 37% as against 32%. But India volume growth as well as margins being maintained while seeing a little bit of an expansion is something that the street will take heart to. The other thing is that the management commentary, they said that the growth has come in due to improved demand conditions. They saw improved demand conditions even in the industrial space as well as auto OEMs. So there is fair amount of growth. However, they have cautioned us about rising crude prices, rising raw material prices. So that is something the street will be watching out for. By and large, a good set of numbers. Looks like the stock should rejoice in trade today.
Okay, and what about Titan?
Titan, well, Titan was a very good set of numbers operationally if you take a look at it, because the revenue growth of around 11.7%, while it was a tad bit below what the street was expecting, around 15%, the operational performance was fairly good. The EBITDA came in at 455 crores as against expectations of 400 crores. The margins spiked, and as a result of that, we saw an improvement on the bottom line as well. Remember, there was an exceptional loss of 80 crore or one-time expense of employee retirement of 80 crores. Despite that, the net profit has come in higher by around 40%. More importantly, the jewelry segment, which saw about a 13% growth, saw a margin expansion of close to 400 basis points quarter on quarter, close to 170 basis points year on year. Management in the commentary in the earnings call said that while this quarter jewelry expansion was led by higher share of jewelry, studded jewelry, better product mix, and a one-time hedging gain, the expansion is likely to continue given on an annual basis. So we saw 170 basis points growth annually. That is the trend that is likely to follow going forward. And they said, 25% jewelry segment revenue growth in FY19 is fairly doable. And if that happens, there are a lot of levers for the margins to expand. So operational margin expansion is something that the street will like and which will flow into the EPS estimates. And we have seen a couple of upgrades this morning.
Okay, Mangalam, so we'll keep an eye out on both those two in today's trading session. That's Asian Paints as well as Titan. But on that note, we'll slip into a short break. You come back, we'll tell you how Zee Entertainment's numbers were. Stay with us.
Well, a lot of earnings to reckon with. We have Zee Entertainment, which reported a good set of numbers as well. We have Sonal joining in to tell us more. Sonal?
Well, yes, good set of numbers reported by Zee Entertainment. In terms of revenue, we were expecting the company to deliver a growth of around 11%. They've been able to deliver growth at around 13% and reported revenues of around 1,725 crore rupees. But EBITDA is something that the street will definitely like. We were expecting a flat EBITDA growth at around 474 crore rupees. Company has been able to deliver an EBITDA growth of 8% at around 575 crore rupees, which is a definite positive. In terms of margins, we were expecting margins at around 27.9% mark. Company has been able to deliver margins of around 29.3%. Margins have been compressed year on year. That is because the operational costs have been higher, ad and marketing costs have been higher. Also, other expenses have shot up by around 55%. So some compression of margins, but that was on the expected lines. Profits, they have come up at 230 crore rupees versus our expectations of 250 crore rupees. In terms of ad revenue and subscription revenue growth, the two major numbers, on adjusted basis, we were expecting it to grow at around 20 to 21%. Company has been able to deliver ad revenue growth of around 24.9%. The domestic subscription revenue growth, which we expected to grow at around 16 to 17%, company has been able to do at around 18.1%. On reported basis, ad revenue was expected to grow at around 22 to 23%. Company has been able to deliver 23.9%, and overall subscription domestic subscription revenue, that was expected to decline by around 3 to 4%, but now it's declined on only by 2%. Other than that, we also talk about the international markets. The international subscription was expected to dip by 4%. Company has been there, some weaknesses seen, and the subscription revenues, they have declined by 8%. But advertising growth, that is looking good. That in international markets, they've been able to grow the ad revenue by around 26.2%. So overall, looks like a good set of numbers, and I expect the stock to react positively because of that.
All right, Sonal, hang on with us though. Sun TV will post its numbers today. What are you expecting there?
Well, thanks a lot for that. And yes, Sun TV is one stock that has underperformed this year. It's down 14% in this year itself. And also, they have lost some market share in the southern states in Q4 FY18. But in terms of revenue, we're expecting good growth of around 17%. EBITDA is expected to grow at around 19% mark. Also, the margins are expected to expand by 100 basis points. All this leading to a profit growth of around 15.5%. But the key thing to watch will be these two numbers, that is the ad revenue growth and the subscription revenue growth. Ad revenue growth is expected at around 21%. That is on account of transition to commission model. Also, the GST impacts are waning away, and of course, it was a low base last year. Overall subscription revenue growth is expected at 19% because we are seeing there is a fast uptick in digitization in Tamil Nadu. Other number that we'll be watching out for is subscription revenue growth, that is expected to grow by around 12%, and average revenue per user. That is one key number that we'll be watching out for, and that is also expected to improve. You know, in last few quarters, they've always reported numbers in line with estimates. Let's see how the stock really reacts before the numbers come out. Back to you.
Okay, thanks so much for that, Sonal. Well, shifting focus then to the aviation space. Sonia is with us to tell us what to expect from SpiceJet after a disappointing quarter that we saw from Interglobe. Sonia.
Well, absolutely, Nigel. Thanks a lot for that. You know, be ready for a negative surprise this quarter. We could see some pressure on the yields, although that is not the base case forecast from most analysts. So this time around, the passenger growth was actually quite strong for SpiceJet. It was the best out of the lot at about 21% or so, and that could result in a 32% revenue growth. Now, on the operational front, Edelweiss is expecting an EBITDA to come in at 476 crores versus 315 crores. Now, they are in fact expecting the yields to improve. But after what we saw from Interglobe Aviation, what is important to see is whether it was a Indigo-specific issue, the fall in yields, or has it extended to the entire sector? That would be the most important thing for SpiceJet. Apart from that, you remember the load factors for the company has been the strongest over the last many quarters. Last quarter as well, the load factors were standing at 95% odd. Last quarter, they reported their 12th consecutive quarterly profits. So this time around as well, we are expecting quarterly profits to come in at almost 150 odd crores. Back to you.
Okay, all right, Sonia, but Apollo Tyres as well, they reported a good set of numbers, more or less in line with what you were expecting, Sonia?
Yes, it was a good set of numbers, and you know what, it was the best out of the lot. The performance that Apollo Tyres India business saw was better than its peers MRF and SIAT, and I expect that stock to be in the green today. Let me quickly run you through the numbers. The revenue growth has come in healthy at 21 odd %. The operational performance was solid. The EBITDA went up by almost 40 odd %. And the margins too have improved to 12.8% versus 11.2% earlier. Now, the India business was quite strong, despite the higher crude derivatives which they use for their to manufacture tires. The prices of crude derivatives had gone up, but they managed to offset that with better operating leverage. So the India business EBIT was up by almost 49%. The European business actually saw a drop in operational performance, but that is because their Hungary plant is now in ramp-up mode. So we were expecting the cost costs to go up over there. That's the reason the EBIT for the European business was down about 48%. But brokerages have given a thumbs up to the stock. Deutsche Bank says it's the strongest revenue growth in the sector. Apollo Tyres is their top pick in the tyre space, and they maintain a buy with a target price of 340. Back to you.
Okay, all right. Sonia, thanks so much for that. Well, on that note, we'll slip into a short break. Remember, later today, Donald Trump speaks and pharma stocks are likely to be in focus. You could slip into a short break, come back, we'll tell you what to expect.